Welcome to a special year-end edition of the Asian Midday Market Watch. Our guests today are Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, and Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank. Gentlemen, welcome to the show.
A pleasure.
Thank you.
Now, first of all, Jeff and Vishnu, thank you very much for being our regular guests on the show this year, and we really appreciate your insights.
It's nice to be loved. I'm going to go and tell Mrs. Halley that right now.
So now I think we're going to start by getting your insights and take a look back at 2021 and also what we want to look out for in 2022. Now, perhaps you can start by giving us perhaps a recap of some of the key events of the first half of the year.
I'm happy to let Jeff go first. You always serve the good wine first, and you save the cheap stuff for later.
Okay. Look, I think the first half of the year was characterized by optimism that the arrival of these new vaccines for COVID-19 would spur a rapid recovery in the global economy, and that the COVID-19 pandemic would be in the rearview lights by the end of this year. And thus we're characterized by a weaker US dollar and this risk-on sentiment, powered, of course, by the world central banks maintaining interest rates at 0% and flooding the system with quantitative easing money. Now, that obviously has had a huge impact on asset price inflation everywhere in the world. Perhaps the world will be dealing with the consequences of that in years to come, certainly from an economic inequality point. But that optimism, I believe, characterized the first half of the year. However, as we know, come mid-year, things started changing once again.
Now, how would you, Vishnu, anything to add on the first half of the year?
No, not much. I mean, Jeff really summed it up very well. And the only thing I can add to that is to say, yeah, we also had shifting goalposts along the way. So I think earlier, a lot of the focus was on let's get vaccination rates up, and then we'll reach herd immunity, and then we can resume normalcy. I won't even repeat normalcy again in this conversation, but I'll say we dropped the ball on herd immunity, and now it's become, it's just it's a rolling issue as we stand right now.
And then, Vishnu, second half of the year, what were the key highlights? Obviously, a big shift then in a lot of things.
Yeah, I think I'll pick up where Jeff left, and I'll say second half of the year, we had a more volatile period depending on which part of the world you're looking at. So we had a little bit of optimism dropping off with the variant risks, Delta and then Omicron, of course. But in between, I think optimism picked up again because we did reach certain vaccination levels. US growth kept powering on. So the so-called light at the end of the tunnel started emerging. But as we have come into the finishing rounds of the second half, I think what we're left with is more heat than light at the tunnel's approaching end, and it's a bit further than it appears. And so I think objects in the windshield are further than they appear to be, unfortunately.
Jeff, your thoughts?
Yeah, I think it was an uneven recovery. So yes, the US and Europe to a certain extent, developed markets, they powered ahead. Australia and New Zealand, Canada. What we saw was the Delta variant wreaked terrible havoc, obviously in India, where it was a tragedy. Also in Indonesia, where I'm based, also a tragedy. And I think that really put the regional Asian recovery back somewhat. So what we saw was a two-speed recovery here in the world. And you can pretty much trace that line directly to those who had the best vaccines available and those who didn't, basically. And that's the downstream effect of Delta. And I think that is what we're seeing at the end of the year. The United States Federal Reserve is looking to, they've started on the path of normalizing interest rates, but many other parts of the world are nowhere near that.
Now, gentlemen, one of the things I also was very interesting to me was how commodity markets moved. Could we get your insights in terms of things that caught your eye? Vishnu?
Sure. I think, in terms of things that caught our eyes, going by recency, it would be coal prices, of course. So and then gas prices as well. So you've got a rolling power crunch in Europe. Coal prices, really stole the limelight with China coal inventories running down both at the power producers as well as the ports, leading to the power crunch over there. Before that, somewhere in the middle of the year, you had iron ore prices and all performing really well, although coming off the peaks. And all of this, I think, transporting the commodities has been also featured very prominently. Your Baltic Dry Index it's still at multiples of where it was pre-COVID. So I think in October it peaked at about 4.5 times where it was pre-COVID. Right now we are somewhere in the ballpark of 2 to 2.5 times. So I shouldn't say only, but yeah, it's only 2.5 times right now. So those were the commodity themes, and I think the question we're left with. So I'll pick up where Jeff left off with the Feds, looking, opening the path to rate hikes. The question then is, how do we square commodity price trajectories with rising rates, probably a stronger dollar, which has got a negative correlation, and any softening impact it might have on demand potentially globally, and what that would do. And what that's complicated by is China's own policies on commodities that are between spurring growth and strategic reserves and not wanting prices to get too high.
How about you, Jeff? What are your thoughts?
Yeah, I think I've been pondering this year, and I'm wondering if we've seen the peak globalization, and what we're going to see is perhaps peak just-in-time supply chains, because that's been found seriously wanting this year. Are we going to see, I think the world has also realized that China has a monopoly on some quite important parts of the global economy. When you look at rare earth elements, manganese, it's responsible for most of the manganese production, or magnesium production, sorry, in the world. Now, these industries are extremely messy and dirty and power intensive. So there's a lot of NIMBYism in the developed world, especially regarding those supply chains. NIMBY's not in my backyard. Everybody wants a new airport. Nobody wants it right next to their house. Yeah? So as the Western world, particularly if you want to call it that, now going to have to accept that cost, for example, is not the primary driver of setting up strategic supply chain security. Therefore, that will pass through to higher prices. Will consumers therefore accept higher prices as the price of security in certain strategic sectors? And you could probably add in microprocessors to that one as well. And that industry is has a terrible track record of counter-cyclical investment. They all invest heavily at the top of the cycle and then close down plants at the bottom of the cycle. Well, let's see if that will happen again. So I'm really wondering if we've seen peak globalization, but I'm also wondering if inflation, which has been on holiday on a 20-year vacation, basically, thanks in no small part to China joining the WTO, whether inflation is now back again, because China itself doesn't seem very inclined these days to compete solely on price, and they're also becoming a lot more aggressive about maintaining their own strategic stockpiles, shall we say.
So looking ahead, gentlemen, 2022, what are some of the key things we should be looking out for? We start with you, Jeff.
I think the key, there's two things that I'm watching here going into the new year. One, of course, is the Fed starting on the normalization process for interest rates and winding down quantitative easing. Will that impact the bond market? Are we going to see bond yields start to move higher? The bond market has been extremely stubborn about reflecting forward inflation expectations. And as far as markets are concerned, the Fed's got this in hand, and inflation will peak sometime towards the end of next year, and we will all be back in a blissful state of low inflation again. Is that going to play out? But I do think it will lead to a stronger dollar. It's going to lead to weaker EM currencies, because higher rates in the US will lead to dollar strength, because frankly, most of the rest of the world, apart from countries such as Latin America, Russia, and perhaps New Zealand, most of them are prepared to sacrifice inflation in order to support growth, to support their recovery. So I think that's going to be one theme. The other one I'm pretty nervous about, I've got to be honest, is whether Russia will invade the Ukraine in the new year. We could talk about that later, but that will have massive implications for markets globally.
That's the black swan event you've talked about in a number of our shows, Jeff.
Yeah, I try not to mention it too much because I don't want to be the Grinch who stole Christmas, but I think we really need to think about that as a risk event or a potential risk event in the new year.
Those were Jeff's insights. What are your thoughts for 2022?
I think Jeff sets it up very, very well, because he put across a very important backdrop of the Fed going on, starting up their hiking cycle, policy normalization, and a stronger dollar that comes with it. So what I might do is I might focus a little bit more on what it means for Asia. So in EM Asia, the trade-offs and the policy dilemmas start to sharpen. And this is mainly because whilst EM Asia is lagging in terms of the recovery, whether it's due to delayed vaccine boost and just the catch-up recovery or not, they would be forced to catch up with the Fed in terms of rate hikes, primarily because now the trade-off is between macro stability and boosting growth further. Because we've watched different iterations of this, and typically when US rates and the dollar start to rise, that leads to capital outflows from here. And so you've got the issue of macro stability, weaker Asian currencies, which then compound higher inflation that could come about as well. And with that, you then get into the whole issue of macro stability risks overtaking downside risks to growth. So we get into a tough position. And also the policy dilemma is made harder by the fact that as the developed economies that have recovered faster begin withdrawing fiscal stimulus, then there will be a lot more scrutiny for the EM Asia economies that are continuing fiscal deficits, and that could turn on the heat in terms of what credit rating agencies might frown upon. So that means that in the first half of the year particularly, you'll find that EM Asia will be under a lot of stress, and there could be a lot of risk factors. The hope is that by getting into the second half of the year, you can get the dollar easing off a bit, and the Fed's cycle also looking somewhat less aggressive as people look ahead, because our main conjecture is the so-called Kokomo Fed, where they get there fast and then they take it slow. And so hopefully the dollar follows suit and you get a Kokomo dollar, and the dollar starts mellowing a bit in the second half. But with currencies, it's always going to be hard to tell, even if we're taking cues from the Beach Boys.
Gentlemen, final thoughts. It's been a fascinating conversation, but I'd like each of you to leave us with some final thoughts and maybe words of sagely advice as we end the year. We'll start with you, Vishnu.
Oh, I was going to say I'm running dry on wisdom. Never had stocked up. Unlike China, that's high on strategic reserves. That's not my case here. But if a gun is put to my head and some thoughts on 2022, I think I want to take a little bit of a risk perspective on it. So some of my risk perspectives on it, I think I just want to bring it down to three things. One is, if inflation in Asia gets a lot higher, then that's going to be a big problem in terms of growth not having caught up yet. And Jeff was, I think, very right earlier to discuss stagflation risks or stagflation type risks. That's one. The second issue that I think is going to be quite pertinent is, I think, a huge divergence story could remain in place. So the one thing we've seen perhaps is you've got a fairly stable renminbi. I mean, if you watch only the Chinese currency, you'd think it's but it's been exceptionally stable, and I think stability is the name of the game. And you've got this very peculiar situation where US inflation is higher than Chinese inflation. And so naturally on a purchasing power parity basis, the currency has held up. And I think the 2015 experience means the renminbi could be fairly supported, which means some Asian economies may derive some peripheral support from that, and others would be, in stark contrast, would be languishing. So the differentiation could also be another topic. But I think Jeff can tell you a lot more about that.
Jeff, your thoughts, John?
China is on my mind as well, and I think they're going to have a challenge trying to not devalue is a bit stronger word, but make the renminbi weaker, because the borders, I believe, are going to stay closed all through 2022, and I can see it going into 2023, and I'll touch on why in a second. But that means that this giant trade surplus that China has will continue to be recycled into renminbi, and unless they tell all these corporations to hold those overseas receipts offshore, I've got a feeling that the currency manipulation police in New York will get a bit angry at that stage, though, if they start doing that. Now, why will they stay closed? Well, China has vaccinated most of its population, but a lot of that population has been vaccinated with Sinovac. Now, Sinovac, it appears, does not work very well, if at all, against Omicron, which is a shame for me and also for you, Brian.
Yes.
Yeah, and that's a potential risk point, of course, in some EM parts of the world too, because Sinovac is the go-to vaccine there. COVID zero, shared prosperity, clampdowns on parts of the economy, and I'm sure that's an ongoing process. It won't just stop with tech. The China property developer sector, all of this means that China growth, I believe, will be lower than what we're used to from China in the year ahead. And I don't think China's too bothered about that. I think President Xi Jinping's much more focused on the shared prosperity policy, and the consequences be damned to a certain extent. But it all means, especially if those vaccines haven't worked or won't work, that China will keep its borders closed in 2022. And I can see it going into 2023 as well. Without China fully participating in the world, economic growth will be somewhat crimped globally, but it also will be in China. But the net effect is, I believe, that the renminbi will remain strong, just as the trade surplus is recycled. As Vishnu said, that will be supportive of quite a number of regional currencies, but others will struggle because of it.
Now, Jeff, I want to talk finally also about your Black Swan event. Russia and the US, and Europe, of course. You've been speaking very strongly about this. Tell us a little bit about what your thoughts are in terms of how this could impact markets.
Yeah, look, I don't want to be the Grinch who stole Christmas, but he's got nearly 200,000 troops on the border, and he doesn't seem. And one thing is that someone like Vladimir Putin, you can talk, but he's the sort of guy who probably needs a punch in the nose to actually. That's the sort of guy he is. Yeah, and we ignore it at our peril. Yeah, and you need to go back in history to understand the Russian mindset, but also China's mindset with regards to security and having buffers around their countries. And when you look at the South China Sea, for example, a lot of that is a mindset. Yeah? And you just look in the history books and you can understand why Russia and China, I'm not validating that as a policy, but it helps understand the way they're thinking. But if they do invade and obviously roll over the Ukraine, I just don't see it being positive for any European asset whatsoever. For a start, Europe gets 40% of its energy from Russia. And they've made a number of strategically inept steps, Europe, over the years regarding what they're vitally, what they require from Russia, basically, whether it's minerals or energy. So you can assume that's going to be negative for anything European. We can assume that oil will be well north of $100 a barrel because they are the second largest exporter of oil in the world, I believe, or the second largest producer, not the second largest exporter. But sanctions will follow, so there'll be an energy crunch. We can start extrapolating the follow-throughs on that, particularly in Asia, where a lot of Asia are very, very large energy importers. So for me, it would have huge ramifications around the world. We can expect a much higher US dollar, lower US yields. Maybe the central banks will quickly unwind what they were starting to think about doing. But I think it's a risk point that we need to consider the ramifications of in 2022. I hope it doesn't happen, but if it does, it's going to have huge impacts on the world economy.
Gentlemen, thank you very much for taking your time to be on the show and to share your insights.
A pleasure. Thank you.
A pleasure.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, as well as Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, on a special year-end edition of Biztech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our various social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thank you very much for tuning in.